Welcome to the Show Me the Money podcast, Unlocking Property Finance. Join us on an exciting journey into the world of property finance, where we uncover secrets, strategies, and opportunities that can turn your property dreams into a lucrative reality. Welcome to Show Me the Money, Unlocking Property Finance.
Hello, everybody. Welcome back to the next episode of Show Me the Money, Unlocking Property Finance, with myself, Sharma, and
me, Marc. Hello, everybody.
So thanks for tuning in. Today, we're just going to do a very brief market update. The last time we released an episode, I think we were recorded just before the last Monetary Policy Committee meeting in late September. Whereas we recall the base rates were held and didn't change. Some of the things we talked about before, as if you haven't heard that episode, then please do sort of have a listen. We talked about some of the changes in lending activity, lender rates becoming more competitive. So it'd be interesting to hear Marc's view on how that's changed since then. The economic outlook, the really sky-high fees that some of the lenders were offering with their products. And the effect that was happening on sort of loan to values in the market. So since we last recorded, there's been a few changes in the macro environment, some global events, and who better to talk us through some of these items and the impact on the lending market than our very own Marc. So Marc, what have we been seeing, I guess, since we last recorded? It's been three weeks now or so. What are we seeing in the general lending environment in terms of rates? Any changes?
Yeah, the change is there's been no change in the rate, the base rate. So it's been really encouraging actually. The last week, I would say, after the base rate didn't go up a couple of weeks back, we've seen lenders price in a slight reduction. So it's not a massive thing, but it's the first time this reduction has happened for quite a while. We are seeing some lenders struggle. We've seen obviously some issues with Metro Bank and a few other lenders in the market and specialist market who appear to getting a little bit close to the wire, but that was always to be expected. But there is definitely a price war, not only in the regulated residential market, but in the specialist market. We're looking at lots of different types of loans at the moment, and we've got some quite chunky loans where lenders are now pricing at around 2% over base rate. So that's pretty competitive, and lenders want to lend money still. There's still liquidity in the market, and there is still a hunger to lend, and that means beating the competition. And to beat the competition, you need to be competitive, rate in terms of rate and loan to value. So we're seeing some interesting things, and some people who were sitting on their hands, some of my bigger clients, are now thinking, do you know what, maybe this is the time to refinance. And sorry, I'm going on. It was a quick question, and it's going to be a long answer. So the people who were sitting on their hands, they're looking at variable rates, and they're thinking that the base rate may come down a little bit more. So they're looking to go on to variable rates, potentially with no early repayment charges. So if it does go down, then that's great. They just continue coming down. But then if it does go up, they can alter their position. So
yeah, that's something I've done myself actually. Just in the last few months, moved one of my properties onto variable rate for exactly that reason. Let's see how.
Yeah, no, it is interesting, and people who weren't doing anything a few weeks ago are now saying, do you know what? I think we've hit the peak, and hopefully it's going to be something that we can manage going forward on a variable rate. So the only thing that I would say that most lenders are now putting in a early repayment charge on variable rates, which hasn't really been done too much before. And if you've got a 3-year variable, the early repayment charge is going to be 3%, 2%, and then 1%. So there's still quite harsh penalties, but there are a few little diamonds out there that that we found that aren't doing the early repayment charges. So yeah, if people are looking at their portfolios, it's a really good time to actually have a look at it and get in touch with us.
Interesting. Couple of things you said there, which I wanted to pick up on. Obviously, Metro Bank have been in the headlines. They've obviously had some capitalization issues for probably going back a couple of years now, due to that infamous accounting error, which was spotted, which created a little bit of havoc in the in the market. However, they've still been out there, still been active, but obviously there's lots of talk of them selling their mortgage book now, and I'm sure there's a few people who are a bit concerned about their bank balances and their cash being safe, which I'm sure will be fine. But what's your take on it? What are you seeing?
Yeah, so I was actually out with somebody from Metro. This was Friday, and I asked them what the branch was like, and they run one of the branches. And he said we had 2 people come in and ask for their money back. And of those 2 people, one had a £5,000 balance, which obviously would have been protected anyway under the guarantee of up to 85,000, and the other person had 250,000. And when the branch manager explained the situation and explained the risk-weighted assets and the requirements that Metro need, because they're treated slightly differently to high street banks, they were comfortable with it and left their money where they were. So I think the press like to sensationalise things, and everything gets blown up, and it's not what's happening in 2008. It's far from that. There aren't long queues outside Metro banks. It's just business as normal. And if they were under the same rules and guidance as the high street, then this wouldn't even be highlighted. It wouldn't be a question. So yeah, it's just slightly different ways accounted for. And I think, in my opinion, there are obviously a few problems that have to be addressed, but whenever isn't there in a bank, there's always problems that have got to be addressed.
Yeah,
but I think it's press sensationalisation, and I think they're just trying to create a bit of a story when
nothing that we're not used to. And
exactly.
how does this impact the mortgage products? Because they obviously do a bit of lending in the buy-to-let space.
Yeah, they do, but do you know what? We never use them, and we don't use them because they haven't got a massive appetite in real estate. What we use Metro for is their cash flow finance products. They're very good at invoice discounting, and they really are good on business lending. So we talk to them a lot on those things, and their products are impressive. And do you know what? Their team there at Metro, who we deal with, are really good. There's some very experienced people who have come from other high street lenders, and it's when you're dealing in business, it's not all about the rate. It's about who you can work with and help manage your business. Because when every morning a relationship manager gets what's known as the watch list, and that watch list has all the overdrawn positions or people who are getting close to that, and then early warning indicators that pop up and go against each customer. So the relationship manager gets given that. And if you are not well known to a bank, you'll get a call saying, why are you £10,000 overdrawn, or whatever it may be? What are you going to do to cover that? And usually somebody will say, oh, we've got money coming in, or whatever it may be. But if a bank knows the customer very well, those conversations don't need to be had, because they'll know how their cash flow works. They'll know the cycle they're in. So it saves a lot of time, and there's a relationship. And when you've got a good bank manager who understands their customers, and it works the same with property customers as well, especially on a development, you're drawing funds down for in tranches on a particular project. If you've got a lender that understands the process, understands the business, and understands the customer, you're in a better position. And sometimes you have to pay a little bit extra for that. It is worthwhile in the long run.
Interesting. So that's obviously something we want to talk about on a future podcast as well, and go into the details of that, of the other forms of business lending. On the back on the macro topics, obviously we've seen some rather nasty events unfold in the Middle East, in Israel and the Gaza Strip. What's your view of the impact on the market and sentiment? We've obviously been in this period of inflation due to Ukraine. Are we going to have to take a bit of a step back again, and revise our target? What's this going to mean for us? What are you seeing?
Yeah, it's a real difficult one, because I have a lot of Jewish customers. I have a lot of customers from the Middle East as well, and it's been going on for a long, long time, this issue, and I don't think it's going to get sorted out very quickly. When the war in Ukraine happened, when that started, it created like big shockwaves through the market, especially with the supply chain. And I don't think we're going to have the same supply chain issues, but any uncertainty creates volatility in the markets. People don't know what's going to happen. So it really is cause for concern, and the cause for concern is nobody knows how long this will go on for. And I don't know, I can't imagine it be resolved very quickly. So the markets, I think, will see a bit of uncertainty, and I think inflation may, the decrease in inflation, reduction in inflation may see itself stall maybe slightly. It's hard to say because with the, like I said, with the Russian, the Ukrainian problem, there was an obvious impact to supply chain. I don't think that is quite the same case with this conflict. But then there's a lot of property investors in the UK on both sides, so it's going to be interesting. But hopefully, it just gets resolved quickly, and things can return to
One to watch.
peace.
For sure.
Yeah,
I think, as you say, the market uncertainty or the spooks are what kind of creates that disruption in the pricing of the sort of mortgages and the bonds market. So let's see what happens there. What are the other sort of big things that are happening at the moment? We know there's been some movement in the government policy on quantitative tightening as well, which they were looking to buy back bonds as part of their program, following the years of quantitative easing and selling bonds to raise money.
Yeah, that's right, and it's all designed to hopefully tackle the inflation issue that we've got and control the economy. We've seen quantitative easing coming in and a flood of money coming into the market. But like I said right at the start of this episode, there is liquidity in the market, and there's a lot of liquidity in the market. With rates coming down as well, it's going to be interesting. And I think that with this quantitative tightening coming in, the money that is borrowed from the US is going to be more expensive. It's going to start becoming a bit more expensive, which could again put a bit of pressure on the lenders, and especially, in my opinion, the short-term lenders. So when people are doing their bridging, 12 months, 18 months, term on there, it's very prudent to work out who the funder is funded by themselves.
Yeah.
If their money's going to be more expensive, in turn that'll get passed on. And with margins squeezed on bridging anyway for lenders, it's really hard for them to make a profit. So ensuring what the funding trail looks like is really important.
So you make a great point there, actually, and it's something that a lot of people don't really ask about. where are those funds coming from, and at what cost? How can listeners be more in tune with that? How can they find that information out?
Well, they should be able to ask the lender themselves. So first and foremost, I would, most people when they get bridging go through a broker, and if any of the customers were to ask me about the funding of any of the lenders, we can find out. We just ask them. We've got good relationships with people high up in the in each lender. We can ask them, where does your money come from? And then if you think about it, Shawbrook fund, I think something like 30 bridges, something along those lines.
Yeah.
So we know where that money's coming from. And then you've got JP Morgan, who fund a lot of lenders. You've got loads of different funds all over the place. So just speaking to your broker and asking them and asking how safe it is an important question. And you know, if back before 2008 you said, oh yeah, the money's coming from RBS, you'd be like, oh, yeah, do you know what, that's really safe. But then obviously issues can hit anybody, no matter how big or small a lender is. So it's just being careful and making sure you don't put all your eggs in one basket. If you're planning your wealth strategy, making sure that you're not just invested in property, you're invested in other stuff that is diversified. So if something does go wrong, you can minimise your risk. It's common sense, but a lot of people don't do it. We see a lot of people go on these training courses, put their life savings into property, and then that's it. Gear up really high. If one deal goes wrong, that's all their life savings got. So hopefully people can listen to this podcast and realise there's lots of different ways to invest, and there's lots of different ways to make money. You've just got to be careful, but I was going to say adventurous, but that's the wrong word. You shouldn't be adventurous. Well, you can be if you want, but you should be calculated in your
managing your risks appropriately.
Yeah, exactly. So,
yeah. Very good. Yeah, so. One last thing, just to get your opinion on construction industry trends at the moment. What are you picking up on there?
So we're seeing the larger house builders struggle a little bit more. House prices have gone down, so it went down 0.4% last month. That indicates that people aren't buying as much, and not only does that impact the larger house builders, but it's impacting the smaller guys, the people who are doing the small projects. And it's really interesting. We're primarily a broker, but we're getting loads of people coming to us and saying, have you got any funds that you want to invest yourself in projects? So people still want to be doing the small house builds or the small conversions, but they're looking for extra funds because they still want to do it, but funds aren't as readily available. And I've not really been asked that question so much before, but now we're probably getting a couple of weeks that are asking us if we would like to invest or we know anybody who would invest in their project. So it's a really interesting time, and I think there'll be opportunities for people who have got cash to make some money. Indeed. Something I'm keeping an eye on myself as well. Brilliant. Well, I think that's probably as much as we've got time for today for our short market update, but we'll do more of these and hope everybody finds them useful. Be sure to send us your questions and comments and any topics you want us to cover. We'll be sure to do that, and our contact details as usual will be in the description. So that's it for now. Excellent. Thank you very much, everybody.
Cheers for listening.
That concludes another episode of Show Me the Money podcast, Unlocking Property Finance. Connect with us on social media, where we share additional tips, resources, and behind-the-scenes insights. Feel free to reach out to us with any questions or topics you'd like us to cover in future episodes. Until next time, keep exploring, keep learning, and keep making those smart investment moves. This has been Show Me the Money, Unlocking Property Finance.